Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. We are also 2/3 of unfilteredinvestor.com. Please come over and check us out there. Bobby and Mike's technical analysis has been astounding. So Trump chicken's out. Like, it so irritates me when people say that. We've been watching for 50 years. He anchors a negotiation and then tries to hit somewhere in the middle. I don't, calling that chicken's out almost seems like it's people who want him to do something extreme so they can go, aha, I gotcha. What do you think?
Well, it drove me crazy. And you and I tweeted similar things independent of each other this morning. I tweeted that the difference between the description of what was going on between Bloomberg TV this morning and Fox Business News was unbelievable. Bloomberg was just like, this is no real ceasefire. It's not going to hold. They're still far apart on so many points. Still a lot of work to do to get crude oil lower. The supplies are going to be disrupted for 6 months. There's still firing going on from Iran to Israel. And then you go to Fox and they're like, Trump did it again. He's a genius. Another victory. America's winning. And what bothered me about that was what we always say. The truth is somewhere in the middle of those two, right?
Yep.
But people who are watching one or the other are getting poor information that a lot of them make investment decisions based on.
Yeah.
And that's what bothered me the most. It made me sick. You had something else you tweeted about.
Yeah, no doubt. A similar sort of thing. But I will tell you this, is that the markets tell you what the real story is, right? So crude's off $17 at $96 a barrel. So they're saying this is mostly something to believe, but not 100% certain. If it was 100% certain, I think it would be down another $10. So you think that's fair?
Yeah, completely agree. But there is fact to getting the supplies to market, to lower prices at the pump, as well as elsewhere, right? Not everything is gasoline with crude oil. Takes time. We just had the first few vessels come out of the Strait. They're not at their refineries yet. Or if they had refined products, they're not at the end buyer yet. So it is going to take time. We are in a new range, and that's probably going to be from the mid 80s to high 90s for a while until it actually bleeds through.
And the curve looks, I was
going to say, I know you had more to say, but before you get to the guest, we have a viewer named Jonathan Barnett who asked a question in our last live stream. If you will let me, before we get into it with the guest, because he commands attention, I want to point something out to him before we get there. So just to give you that heads up.
Okay, so we'll do that. We'll bring Brian on now, but I'm going to give my normal intro for our guest, because you may have been watching Bobby and I for 25 years and think that we're full of shit. Sometimes we think the same thing, but one thing you cannot deny is we get outstanding guests to say yes to come on our show. Today is no exception. We have one of our favorite guests, Brian Wesbury, who is the chief economist of First Trust. Let's bring Brian on. Brian Wesbury, how are you, my friend? Can you hear me?
I can't hear you guys.
Can't hear me.
No. Can you hear me?
Can't hear either of us. Shoot. So we'll try to figure that out. Bobby, why don't you talk about what you're going to say to John?
I do what I was going to do. So Jonathan Barnett asked a question last week, and it was essentially this. It was, given these binary events, it's either going to be...
Hey guys, my message says you can hear me, but I cannot hear you. Sorry.
We can hear you. Yeah, I can hear you. Luis, you want to call him and walk him through it or anything?
Yeah, I will text him in the private chat.
Yeah, we're going to text you. Yeah.
All right. So in the meantime, Jonathan Barnett asked a question about, is it practical to use our strategy when we have these sort of volatile events going on, right? Now, I don't know if Luis is going to be around to actually put this chart up for me. But this chart I just put up on the screen was one of the trades that we had on, okay? And this is Enter Systems. And this is when Jonathan asked the question. And my answer to him was, if we have a trade set up, we put the trade on. We often get outsized gains to offset some of the outsized losses that we see when there are just these sort of binary situations, right? Mm-hmm. What I'm pointing to here, the green line is target number one for this trade. We got into the trade down here we bought about 165.34. And I do want to point out This is on the Unfiltered Investor, by the way. I do want to point out that this is the movement of the stock during this downdraft, right? So we found a stock that was going up. This was a recommendation on Unfiltered Investor. So target one was hit on March 25th. Now we had all this sort of sideways movement with all the sort of volatility going on with the Iran situation. Today we get a ceasefire. Our target two was at 183.75, but the market opened at 189.94. I'm sorry, at 186.68. So we got a 1.58% outperformance on our second target. This is why we just take trades, right?
And
oftentimes we get something below our stop. Other times we get something that exceeds our target and we get a better price on that. There was another one, and it was Semtech. So it's SMTC. Okay, this one had not hit its target yet. On the open today, it was above its target again. The first target of this one was 87.23. The open on this one was 88.07. So we got an over 1% better fill on the target if you had your sell order in, like we ask our subscribers to do. So to Jonathan, when he asked, is it practical to use your strategy during these times as opposed to kind of sitting it out and seeing what happens? This is exactly why we do it. Sometimes we get outside losses, sometimes we get outside gains, and over time, we feel that they balance out and the numbers kind of bear that out.
Okay, now back to our guest, Brian Wesbury, who can hear us just fine right now.
Yep.
Did you hear us talking before we brought you on about the whole
I can't hear you anymore. I don't know why it just cuts out.
Oh, that's
I heard
weird.
you fine just a minute ago.
Yeah, Luis, you got any reasons for that?
Now I got you back.
Okay,
There
perfect.
we go.
Yeah. What are you using there?
Hey, don't move a muscle.
I can hear Bob. I can't hear Jim.
Is it the Commodore 2000 he's using out there?
I don't have any buttons to hit.
All right.
Let's go.
Bobby,
Did
you asked
us,
questions then.
Yeah. Did you hear us talking before you came on about what was going on in the current situation?
Well, I just saw you you popped up two charts and talked about your trading strategy. And I heard all of that. And then the minute we took me and I now can hear you, Bob. I still can't hear Jim. I don't
I'll
understand.
resign, Bobby.
Yeah. So what we were talking about before we brought you on, before I showed those charts, right, was that some stocks were kind of believing what was going on. The crude oil market believes that there's a ceasefire in place, but it seems like the crude oil market is reacting as if it's a 2-week ceasefire, as opposed to a complete cessation of risks for oil that's in the Strait of Hormuz. My response to Jim was, even if this is a permanent ceasefire, it still does take time for product to bleed back into the markets. So there is still a section of price increases. The Fed's finally getting maybe their transitory inflation. So what say you on that whole subject?
Yeah, well, I don't know if you saw Iran's announcement today, but they announced that the U.S. had completely lost the conflict and that the U.S. agreed to all 10 points of their plan, which includes them controlling the strait and likely charging some money for people to go through there to get repaid for the cost of the war. And so I think the oil market's right that this may be a ceasefire, but if Iran controls the strait and now treats it like a money-making machine, it's not really open. And they may only open it up for certain countries too. So I think there's still a lot of uncertainty about how this plays out because Iran is convinced that it won, and it's actually threatening the U.S. And the rest of the Middle East for not treating it that way. So
Brian, can you hear me now or no?
I can hear you loud and clear, Jim.
Oh, good. Because my question to that would be, is that don't we expect Iran to say those kind of things after this? Isn't that a political thing to try to save face? So I did see that, and I didn't put 100% confidence in it. I put 60% confidence, which is what the oil market is putting in, right?
Yep. Yeah. That's exactly right. So I would say, hey, the market's up for a reason. Oil's down for a reason because this is better news. The question is how far, Iran. I don't work for the State Department. I don't, so I'm just going to blurt it out. They lie, they cheat, and they steal, and they kill. And if they aren't really changing their policies, then the oil's going to go back up. And so here, and kind of the way that I and the analysts that I talk to think this should end is that there's a military coup, if you will. The mullahs are out, the military's in. And if you kind of think about the military, a lot of them are more interested in making money. They don't really care about, a religious, takeover jihad of the world. And if that's what we can get, make a deal with them, share oil revenue with them, then it could be over for real. But I think there's still doubt that it's going to end that way.
Sure. And what about, so I assume that your belief is that we have CIA on the ground there, like we do everywhere, that is trying to, advance this goal, like you say, right? So do you believe it's going to happen?
Well, it could still take a couple of years. And, right now, it seems like the leadership in Tehran, of the IRGC, I think there's two kinds of people in the IRGC. There's the zealots, and then there's the ones that are interested in getting paid. And I'm sure it's a battle between those two, but they've cut off all internet in Iran. We need to get some Starlinks in there, and so that information starts getting out. But they've cut off all internet, and so what are people to believe? They're telling their country they just won the war and the U.S. capitulated. I don't know if Trump will take that for long, because it's not true, and so. It could end up taking 12 to 18 months before this all gets sorted out, and the mullahs are gone, and the less zealot, the fewer zealots we have in the IRGC, and if we can cut a deal with a military government, then I think things look really good. But it might take 12 months to do that.
Yeah, I smiled when you started to talk about Iran saying that the U.S. backed down and that they won for the exact reason that Jim said. We know that one of the points that Iran demands is that the U.S. gets rid of all of their bases everywhere, and that they continue to enrich uranium, which, both of those two are a non-starter for the U.S. Yet we're still looking at crude down 14.75% as I speak to you right now. I'm also looking at, if you look at the NASDAQ futures on a rolling front month, they're essentially unchanged from February 26th. And February 28th was the approximate start. If you look at QQQs, for example, the close on February 26th and the Qs, 609.24. The close right now, if we consider them closed, 606.09, literally about $1 apart. So it's almost like the entire sell-off in equities came back, if you believe that nobody had the news ahead of time and started to pressure markets, because markets seem weak already.
Right.
So what I want you to consider, and tell me if I'm nuts, is that the U.S., Trump specifically, is going to allow them to talk like this for a while and possibly allow their populace to believe this until they can get the people from Google, the CIA, to arrange the military coup on the ground. Does that kind of make sense, or is that just crazy talk?
Yeah, I think that makes sense. But I'd step back just a little bit too, as a macro guy, a macroeconomist. I'm looking at all kinds of things right now, and I will tell you, I have an opinion, but I am less sure of that opinion today than I have been maybe my whole entire career. We think about it. We have zero net immigration into the United States in the past year. We have tariffs in place that we really haven't had, since the 1930s. We have a war with Iran. We have Europe not willing to work with us. There are, and then at the same time, the money supply has been slower. The deficit has flatlined. It's no longer increasing, and we've laid off 330,000 government employees, and our job growth for this past year has only been 42,000 a month. If we would have been on this together 5 years ago, it was 200,000 a month. That's the kind of number we always looked at. And we've only had 42,000 job gains a month. And then final point is the stock market, at least using my models, is still overvalued. Not like 99 overvalued, but it's expensive by any way you look at it. Price to sales, price to book, price to earnings, I mean, the Buffett model to GDP, and the stock market hasn't. The S&P is basically where it was 6 months ago right now. So you put all of that together. Are we going to lose wealth effect spending? Is the lack of immigration going to hurt our job growth? Like, continue to hurt our job growth. And so I just put it all to, and there's still uncertainty about Iran. So when you put all of that together, I don't think we've ever faced a list of things like that in our careers, or maybe in the history of this country. I know we've been at war. I know we've done tariffs. I know we've changed immigration back and forth, but boy, you put it all together, and it's a mixture of developments and some economic, some geopolitical that we've never had. And so it's really it's a fascinating time, but it's one that's really hard to forecast in.
No, and I don't disagree with you at all, by the way. I think that we deal with what we know and then the unknowns. And right now,
Right.
that side of the ledger is quite a bit more. And by the way, it's silly. The people who act like they're not unknowns and they have some sort of crystal ball, that just is embarrassing to them, because we don't know how
Right.
it's going to play out. It's a chaotic system. A couple of things you did mention, or one thing you did mention that I want to pick apart first before I go, is that you said deficits are down. I know deficit spending oftentimes fuels growth, fuels money supply growth. But if deficits are coming down, not because we're spending less, because we're not,
Right.
but that tax receipts are coming in higher than expected over the last year, that's what's bit into deficits. That's
Right.
inarguably a good thing, correct?
Yeah, I think so. The only problem is a lot of that money came in from tariffs, and now the courts are basically saying we have to pay it back, and the Supreme Court hasn't ruled
Grab
on
my
that
wallet.
yet.
I'm
but
not paying in shit back. My wallet's staying in my pocket. I'd rather be out on the lamb than not giving you any of my money.
Yeah, and the way I kind of think about it, it's sort of like, caffeine, I mean, or morphine or painkillers. You have to keep taking more to have them work, sort of. And it's not the perfect analogy, but with deficits, they have to keep going up every year to be stimulative. Otherwise, it's flat. And so the deficits aren't improving dramatically. They're just not increasing anymore. So, and you can, gosh, during the Biden presidency, government employment was growing like 3% a year. And once we adjusted for COVID and everybody was back, private sector jobs were only growing 1% a year, and now we have negative government job growth. So that's kind of where it's showing up. But the private sector job growth hasn't replaced it yet. And then, by the way, I didn't even mention one of the other massive things going on, and that's AI. How much is it affecting employment? And we know it is in software development and Google searches, and Amazon's doing more with fewer people, et cetera. But 42,000 job growth, 42,000 added jobs every month. That's not a lot. And I remember the days where if it fell to that, we'd be talking recession.
Right.
And now we're not. And
so you think government employees, lack of immigration. Oh, I can't believe I went those two fingers first and left the middle. And then AI. So those three things are all working to keep labor from growing. Now, the lack of government employees you'd consider a good thing. The lack of foreign-born workers is a mixed bag. Remember, Bobby and I are both from immigrant households. We're very, very pro-immigrant. The legal immigration thing was obviously absurd, and an absurd policy, and it was obviously designed for a specific goal in mind. So I'm glad that's done. But so if you were advising presidents, which you have in the past, by the way, but if you were advising this president right now, would you say that we seriously have to make a point to increase legal immigration, particularly people who want to come here and have skills and want to kick ass?
Right. Yep. Absolutely. Legal immigration. We call them H-1B visas, and there's other categories. That's where we need to go. I'm a second generation immigrant. My dad was my grandmother at 6 years old came through Ellis Island, and then they had my dad, and then me. So believe me, I love immigration, and it built America. And what if I were running for office, which I will never do, but if I was running for office, the way I would explain it is I want a really big door, but I want really big desks inside the door. And then we're going to check you out for being a criminal or having tuberculosis or whatever. And you have to pass that first. And then the next thing is you can't get on a welfare program if you are an immigrant.
Basic Milton Friedman, right? Basic Milton Friedman.
Yeah.
You can have a lax immigration policy, or you can have a heavy welfare system. You cannot have both. It is unbelievable how simple that is. I'm so sorry I cut you off. Go on, though.
No, that's okay. I mean, the way I put it is when my grandmother came here, when all the Irish and Italians, came through Ellis Island, my grandmother was Polish, but we put our arm around people and we said, welcome to America. And we're so glad you're here. Good luck. All right. Now we go, welcome to America. Here's a cell phone. Here's an EBT card. Here's how you get into public school. Here's how you get Medicare, Medicaid. Here's how you that's what we do. And then people don't want to assimilate. There's no that whole system breaks down. So I'm all for immigration. I think it would help our country, but we can't have the welfare system. And you said it great, Jim.
Yeah, I think the worst part about it is that people don't want to assimilate. I mean, my parents came here, right? So I'm the first generation born here, and all they wanted us to do was be American. They didn't, we kept our culture in our house, obviously. And when our family would come over, the neighbors would all complain that the Italians must have two people in the house again because it sounded like a block party because everybody was screaming, right? But then as soon as we walked out, my father wore suits, spoke as English as well as he possibly could. I'm getting off on a tangent. I want to put up a comment by Remo real quick, just because I like what he said here. It's stock charts. Remo says, I look at the Trump administration, all the geopolitical BS, and I think, imagine if Kamala was president. There's a comedian, and we all know who he is, and I can't remember his name right now. He's a Saturday Night Live guy. Now he's very conservative, wears a fedora all the time. I heard him tell a joke the other day that replacing Joe, what's that?
Rob Schneider.
That's him. He said replacing Joe Biden with Kamala Harris is like changing your shirt when you took a shit in your pants. I thought that was a great way to put it. Then that was just because I liked his comment there. But then I want to put up Widge here, because Widge, I think what Widge says here is important for a number of reasons. Widge says the only winners over the last 5 weeks, the past 5 weeks, are the military contractors who were just awarded another generation or more of terrorism to defend us against. I own defense stocks. I bought them about 2 weeks into the conflict. And so their contractors are not the only winners. I'm a little bit of a winner here with the stocks that I bought. But I do want to say something, and I'm not sure if I should even say this, but I have a friend who is in anti-terrorism military intelligence, and he can't tell me anything specific. But he's told me multiple times, if I told you everything we've stopped, and I worry because, and I want both your guys' comments on this, I worry that his superiors and him are sometimes full of shit when they're talking to me. And I also worry that he can't prove a negative to me. So how would I even know? And I trust him as a human being. So the more successful we are at stopping these things from happening, the less trustful our public becomes that they're actually a threat. Can either one of you guys comment on that for me, please?
All I can say is this. If I was in charge of anti-terrorism stuff, I'd be implying everywhere that I saved every one of your lives all the time and that you owe me. And I'm only half kidding, is that I do think there's a normal human tendency to boost up what you're doing, which, by the way, I'm not saying that he's not doing.
No, I agree.
Yeah. So I hope that it's less than he's implying, but I know that it's more than we think it is.
Yeah,
Brian?
and that's what happens when you let 11, 12 million people
Bingo.
across the border and we have no idea who they are. The one thing I would say that it's not the same thing as stopping terrorism, but we have now deployed in the Middle East these, I think it's called Erdos system, and it is really effective at stopping drones. And so I think one of the things that's happening with oil right now is that the threat of taking out oil fields and pipelines, it has gone down because of the technology we've put in place. And I think the one thing that I think people underestimate is the power of our military, and I think that's one. It became absolutely clear. I've always thought it was that we had no equal, but after this last 30, 40 days, it is very clear that we don't have an equal.
I also
And
want to throw in real quick, just to kind of clarify my own thoughts. I do think there's a ton of waste in the military industrial
oh yeah.
complex. I don't want to make it like it's a bunch of angels taking the least amount of money they need to build the coolest stuff. But I just want to throw that in there. Go ahead,
Quick
Brian.
time out here. Actually, before I go to the timeout, I will address Widge. Widge Brian is one of our favorite guys. He comments on our shows, and usually
Yep.
we agree with him. But he doesn't mind if we don't agree with him 100%, and I agree with
Yep.
him about 30%.
Yep.
There's part of me that says this may have been a waste of time. I'm holding out judgment for another couple months to see if I think it's a waste of time, and I hope he's wrong, as he hopes he's wrong too. I'm sure, but I'm hope that we get some real spill here. But before we go on, Luis, will you please put up the banner? This is the time where I ask the watchers of this show a favor. Please, if you like the show, if you want to support us, scan that QR code and try Tradier Pro for free for 3 months. We talk to people who've been trading options for decades and people who've been trading options for days, and both of them agree on one thing. Tradier Pro is the gold standard for an options platform. Again, even if it's just to say thank you to us, give it a try. Try it for 3 months for free. We would greatly appreciate it. And now back to the show, Bobby.
Yeah. So go ahead, Brian, what you were saying about this in terms of, do you believe that the military industrial complex drives GDP anywhere else in the country, or is it just that small piece?
It's a big piece, bigger than a lot of things. Probably about 3% of GDP is what we spend on the military. But back in the 60s, we were spending 12 to 15%. Bill Clinton cut it from 6 to 3, and we've been kind of stuck at 3 for a long time. Here's one of the things that worries me is we ratcheted up spending in the '08 great financial crisis. We did it again during COVID, and both of those took us to higher levels without defense. And hardly anybody's I hear some Republicans say I want to take it back to '07 levels or 19 levels, and we've had no success at doing that. And then I read the Wall Street Journal editorial page, and they're cheering the fact that we're going to go to $1.5 trillion dollar defense budget. And so all of a sudden we'll end up with bigger deficits because of this. And so yes, I do believe, obviously we're producing things, it adds to activity, but as the way I look at macroeconomics, you're taking it from one group, all right, the people that make money, and you're giving it to the military industrial complex to spend on something else. And I have never felt like building bombs to just building stuff to blow it up creates wealth. The only way the military creates wealth is that it makes people willing to invest in our country. Nobody's building $1 billion paper mill in Somalia. All right, they'll do it here because you're not going to get attacked and blown up, and you have a military protecting you, so we get a benefit from it, but we're giving up something else in order to afford it. If the world was perfectly at peace, we'd have more growth, because the whole world, like, this is nirvana, right? Nobody hates anybody. Nobody's going to attack anybody. Everybody can drop their militaries to 0.5% of GDP. I think the whole world's GDP would grow faster. But what I do want to do is own energy companies right now, defense companies. They're going to be the winners.
So it's interesting because we all agree that religious ideological leaders like the RIGC, like Democrats, that leads you to nowhere. That was kind of a quick joke shot at the Democrats as being religious zealots. It didn't hit as much as I wanted it to. But by the way,
it's true though.
You sound a little more scared is not the right word, but a little more cautious on some macro big things. And I want to get your opinion on it. So are you saying that we're walking more and more dangerously close to a bond or currency crisis? Is that what you're saying?
Yeah, I do not expect a crisis. All right. One of the reason the great financial crisis became great was because we had mark-to-market accounting. And what that meant is that we forced our banks to write down assets to market values, and the market was frozen. These were fire sale prices, and whether they sold them or not, the banks had to take it as a loss, and so it just compounded. Even if you own a mortgage pool that was paying 70 cents on the dollar, if the market was only offering you 18, you had to write it down, whether you sold it or not. And it just compounded the losses. We don't have mark-to-market accounting anymore. So I don't think the private credit stuff is going to lead to a systemic crisis at all. I think it's a problem for the people that hold those funds, and it's going to get worse, not better, in my opinion. But then the second thing I worry about is that we're now cheering an increase in military spending, and it's just going to drive the deficit up if we don't cut other spending. And I've always thought that George Bush, in order to fight the war, he and Karl Rove, they passed No Child Left Behind, and they increased Medicare and Medicaid spending by a lot. In other words, they were kind of it was guns and butter. Yes, we're going to do guns and war, but we're going to give you some.
Wait, so you're saying they passed those things to appease the Democrats to get them to vote on the military budget? That's what you're saying?
And
want to be clear.
And voters in general.
Right.
General.
Okay, voters in general. Didn't even think of
that.
And
so you don't want people mad. And anyway, so and we won't take that spending back. And now we're increasing all the spending. If the Fed then comes in and prints a bunch of money to pay for that, then we get more inflation, and that's when you get a currency and an interest rate problem. I'm not going to call it a crisis, because I don't think we don't have mark-to-market accounting, number one. Number two, I don't. The system has so much capital and so much liquidity in it that I don't think it'll spread. But you can see it; it's happening a little bit every day. Interest rates won't come down. The dollar remains the dollar's weakened, but it's still the same place it was 5 years ago and 10 years ago. So it's not like we've had a collapse in the dollar, but it's weakened, and everybody kind of calls it a collapse. I think that's overdone. But all these policies, they aren't good. If we don't cut spending, I sound like a broken record. My whole career I've complained about spending. Yeah. And spending has done nothing but go up and up and up and up. And we always find a new reason to do it. Terrorism, a war, more defense, more handouts. It's just, we always find a COVID crisis, a great financial crisis. We keep coming up with reasons, and we have to cut spending. If we don't, we'll never get our growth rate back up to 3 or 4%.
Jimmy, I've got a bunch of stuff in the comments I got to get through. So I want to start with Remo just making a comment that interest and national debt is more than our defense budget. That
It's
goes
true.
to what Brian's talking about spending. Right?
maybe not next week, though.
Yeah. It is absolutely true.
Yeah. Then Widge puts up military spending is exactly how this administration will keep us out of a statistical recession this year. I'd say that and larger refund checks that are coming. And anecdotally, I know they're coming.
See, Widge, we're back on the same page again.
Yeah, Widge and I have actually talked about that during the week, that anecdotally, I know higher refund checks are coming. Then I've got a direct question.
I just always want to remind everybody that every dollar the government spends, like, people somehow think it's stimulus, and And during COVID, when we paid people to sit at home and all they did was buy stuff, it showed up that way. All right. But it was short term. But every time the government spends, they have to take it from somebody else. They either tax it from them or they borrow it from them. And as a result, it's not there anymore. It's out of the private sector. It's now in the government, and they spend it on what they want. If what they spend it on is more productive than what the private sector would spend it on, then we win.
Pause for laughter. Pause for laughter.
Yes. If it's less productive, which I would call war pretty unproductive. Now, I want to take care of Iran. I want the Europe to understand that, that we're doing what's best for them in the long run. But it doesn't seem like a lot of people understand that. I'm not saying getting rid of Iran isn't a good thing, but borrowing money from one group to build stuff to blow it up, it doesn't create wealth. In the long run, the only way the military can create wealth is to make it safer for us to invest here.
I'm going to push
the
back
war
a tiny bit on
itself.
Brian Wesbury. I'm going to push back a tiny bit on you, which I never normally do, because I will say this, and these are big ifs. But if we take control of the Straits of Hormuz and take control of that area, and we at the same time are cutting off or at least controlling 30% of the supply of energy to China through Venezuela and through the Straits of Hormuz, and that is it Hormuz or Hormuz, whatever it is, I don't know. Yeah, but anyway, so that if that could drive down the price of crude, there is a small if that it would appear to be productive domestically if we can then be a bigger player in the oil. Do you understand what I'm saying? Or
yeah,
no?
I agree with you about that. And I would call that the benefits of making a safer world. In other words, the military, we blew stuff up and we got something for it.
Yeah, but we don't know if that's the case yet at all.
Yeah,
right.
Right.
Yeah.
But just the fact that we spend money building stuff to blow up tanks, bombs, planes, that doesn't create wealth in and of itself. What we use it for, it can.
Can I just take a second and just, I got to move away from the show, Luis, real quick, because this just made me laugh. And I have to show you guys this. I monitor Twitter, and obviously this just made me laugh. This is footage of the dark side of the moon. It's not playing, is it? Oh,
No,
it's not
playing.
Oh, basically what you see here on the far right is an imprint of Trump's head on the dark side of the moon. It just made me laugh. I'm sorry. It just made me laugh.
Yeah. Well, what a time for him to be president. We got the World Cup. We got the 250th anniversary. We're going around the moon. I mean,
you can hate the guy if you want, but he's the funniest president we've ever had. Literally, he's the most hilarious.
Did you hear him? My favorite. You probably talked about this one, but this is my favorite one of him. When the reporter from Japan said, "Why didn't you tell us you were going to go into Iran?" And he goes, "Why didn't you tell us you were going to bomb Pearl Harbor?"
Just hysterical.
Can I take a quick side note on Japan too? My buddy who is a major in the Marine Corps, one of his buddies was on Fort Island and Pearl Harbor and in charge of like taking tours. And he had a group of Japanese diplomats there, and they asked, "Where is the USS Arizona?" And he goes, "Right where you put it." Right where you put it 45 years ago. And he got in serious trouble for it. This was a buddy of mine's buddy, and he got lost a rank or something because of that. But anyway, probably go on.
There's a specific question for Brian here from Rich. And he says, Bobby, asked Brian about Warsh and the first 3 to 5 things he needs to change on day one.
Great question.
Things he can do.
Okay. I'll come to Warsh in just a minute, but I want to build this case. We invented quantitative easing. Ben Bernanke actually Japan invented, we stole it. But Ben Bernanke put it into place in 2008. And a whole case for quantitative easing is, in my opinion, based on a myth. And that myth is that it saved us in the great financial crisis. It did not. We put QE in place in September. We did TARP in October. 6 months later, the market was down 40%. Then we changed mark-to-market accounting, and it took off. And so what did QE really do? Like, it didn't save us. But what it did do is it allowed the government, the Treasury, to sell bonds at 0% short-term rates, and the 10-year at one point was down to 0.6, and the Fed was buying all of it. And if the Treasury would have had to sell all that debt for the Great Financial Crisis and COVID to the marketplace, what do you think the interest rates would have been? Not 0 and 0.6, not 1.5% 10-year. They would have had to. These bonds would have yielded 4, 5, 6%, and so the QE, it allowed the government to get bigger. It didn't save the world. The Fed has grown its balance sheet almost eightfold. And the first thing he has to do is start getting rid of QE. He has to do QT. And he's on record. So he was at the Fed and voted for QE in the first place. And then he left the Fed, and then he started complaining about it. But so what he's really kind of said, if you read between the lines, is I want to get rid of all the QE after 2010, but not the first part, which I voted for, which I find, of course he doesn't, because that would be admitting he made a mistake back then. But he needs to shrink the size of the Federal Reserve's balance sheet. And when you do that, you have to reduce capital requirements and liquidity rules on banks, because they are at absurd levels right now. These banks have so much liquidity, they don't need it all. And so in order to do QT, you have to do that too. All right. And then I think I think there's room for 1 or 2 rate hikes or cuts.
Oh, good. Okay. I was looking at
1 or 2 rate cuts. I think there's room, but not much more, because inflation's still at about 2.5. So get me down to 3 Fed funds, and that's a pretty good real rate. 0.5%, 1% real rate. That's where we should be. So
Can you guys
what
see
I
this
really
real quick,
want him
Brian?
to do is, go ahead.
Brian, it says it supported asset prices, which affect higher wealth groups. CO, I don't know what consumer spending means. I don't know what that
Consumer spending. Yeah.
Oh, consumer spending. Go.
Yeah. It did not support asset prices. This is
That's
a
what
myth.
I wanted. That's why I wanted to put that up.
This is a myth. They started QE in September. The S&P fell 40% between September of 2008 and March of 2009. Bank stocks fell between 60 and 80% in that same period. It wasn't until we changed mark-to-market accounting that the recession ended. The recession ended, the stock market bottomed, and never looked back. And we didn't need QE to do all that. All it did was allow the government to spend more at lower interest rates than it would if there was no QE. Basically, it's modern monetary theory. That's what it is. And everybody wants to tell me it saved us, and it didn't. It's a myth. It's a complete myth. It did not work. And yet the Fed says, well, we recovered and we did QE, so the law of causality means it worked. And I'm like, well, it didn't work until we changed mark-to-market accounting. I mean, I'm going to do this really fast. It won't be as good as I could do it, but let me explain mark-to-market accounting. We had it in the 1930s. The first chief accountant of the SEC hated it and got rid of it in 1938. And voila, the Great Depression ended. We did not have mark-to-market accounting from that point, from 1938 all the way until November of 2007. And we never had a banking crisis in that period like we had in the Great Financial Crisis. And what mark-to-market accounting says is that we're going to make 3 phone calls and get 3 bids, and then you have to take the average of those bids, whatever it is, and write them off in your capital account and take a hit, take the loss, as if you really had the loss. And so let me put it this way: if you have a mortgage pool with 1,000 mortgages in it, and 300 of them go bad, All right. And that was going on. I'm not saying it wasn't, but we had like 400 billion of losses for subprime debt, but 300 go bad. 700 of them are still paying every month on time. What's the price of that bond? It's 70 cents. But what the market did was it said, oh no, we're going to lose even more of these mortgages. It's going to keep cascading. And so we're going to price that bond at 18 cents. So you had a cash flowing instrument that was paying you 70 cents a month. And I believe you should have written it down to 70, but you had to write it all the way down to 18. And this is why I believe if we didn't have mark-to-market accounting, Bear Stearns, Lehman, Wachovia, what was that massive savings and loan out in Washington State? Anyway, none of them would have gone bankrupt. I fully believe that
Okay,
because
so you're saying, just to clarify something, because I've been talking to you about this since the financial crisis. And one thing to make it, refine it for people, is that you're not saying that you want them to be less transparent. You're saying the mark to market comes up with bullshit levels because it's a completely flawed system. And until we can come up with a better system for valuing something on a daily basis, then all it did was harm. That's what you're saying, right?
Yeah. And everybody would say, oh, you want us to mark to model. And I would be like, no, I want you to mark the cash flow.
You want to mark to sanity.
You're the one that's marking to model. Your 18 cents says you think another 520 mortgages are going to go bad. They haven't gone bad yet. But why should I have to price that in today? And that's my whole point. It's like, if a loan goes bad, a bank has to mark it down. No ifs, ands, buts, questions. That's what has to happen. So if you lose 300 mortgages out of a pool of 1,000, that thing's worth 70 cents. I write it off. You take that loss, no doubt about it. All right. But if you make me go from 70 down to 18, you're now making me mark to a model because you're assuming another 520 mortgages are going to go bad. And as of this moment, I'm getting 70 cents on the dollar. So when we changed mark to market in March of 2009, that's what we did. We said you can use cash flow to value these assets. So if another 200 mortgages would have gone bad, every bank's got to mark it down to 50 cents. And then another 200 down to 30. But don't make me mark it all the way to 18 just because the market's illiquid.
I love this.
You're saying it just fed on itself.
Yeah.
Because it was mark to market, it just fed on itself and it caused a cascade.
And it never would have stopped. As long as we had mark-to-market accounting, it never would have stopped. Because remember, everybody stopped investing in banks. Nobody would, they were just left on their own. And I still remember The Big Short in that movie. Wells Fargo, what was the guy's name? His Polish last name. Anyway, he was the CEO. They didn't need TARP. They didn't have to take TARP. But Paulson said, see that lady in the corner over there? She runs our FDIC. She's going to come into your bank and mark everything you have to market, and we're going to force you to take it. Go back and watch that scene. It's unbelievable. They actually put it in there. And that's what Paulson used as leverage to make them all take it. And then the big thing is Bernanke comes out and says QE saved the world. Paulson came out and said TARP saved the world. And Geithner came out and said, no, it was the stress test that saved the world.
We're talking about Kovacevic? Was that him?
Yeah. Yes, Kovacevic. Yeah. He was awesome. And he didn't want to take it.
How odd is it that a Polish guy was the voice of logic and reason in this whole thing?
Yeah.
I believe it might have been Slavic. I believe that's Slavic.
Okay,
Slavic.
good. Right.
All right.
That makes more sense. There's a comment on Twitter.
All three of us are from Chicago. We still make Polish jokes.
I got a comment on Twitter that I want to read because it's from Jonathan Barnett, who's another regular viewer, Brian. And first of all, he said, Jim, Bob, great guest. Then he said, disagree on matter of military spending. All the research, starting with the early space program, which was called that, not military spending, because funding even bigger missiles would be unpopular, led to chips, telecom, SW industry development. I don't know what he means by that. an eventual massive GDP boost. I think the
That's
key there
not
is
an
eventual.
unusual take, by the way. I mean, the
No.
military has inspired a lot of technological advances. Brian, handle that.
I mean, I agree that they do, but the military isn't the one that makes it. They didn't build Microsoft. They didn't build Apple. They didn't build, the technology behind it was partly, I'm going to say partly, developed by the military. It was also developed by academics and also HP and Bell Labs. I mean, these guys were brilliant. Intel, Gordon Moore. I mean, they were, so it was a mixture of all of that stuff. It wasn't just the military. And then the second thing is, and our last 20 years, we've only had 2% real growth. And that's in spite of all the technologies we've had. And that kind of that worries me because 2% real growth, no wonder people think things aren't affordable. No wonder people feel like they're not going to be better off than their parents. 2% growth is like European growth. And we know, I mean, we just look, we've gone ahead of them because their growth keeps slowing down and ours keeps picking up. And I guess somewhere in there you could say, well, they aren't spending on their military, but they don't have any tech companies. And we have a ton of them, but our growth is still only 2% a year. So even though we spend a lot on the military, it's petered out.
Yeah. So it sounds to me, let me wrap up what your thoughts were in this whole thing, is that you shouldn't be too out on the risk curve right now because there's dark clouds. Clearly, you mentioned energy and defense, but you didn't mention the broad market. So you think a smaller allocation to the broad market?
Well, no, I want to be broader. I mean, I don't nobody hold me to these numbers, but I think in the first quarter, 290 out of 500 S&P 500 stocks outperformed the index. And that's broadening out. And that's what I believed is going to happen. I think AI is the real deal. I think we're a longer way to pay off these tech companies, which used to be asset light, are now asset heavy. I want to be really careful with them. I'm not saying I don't want them in the portfolio, but I don't want 40% out of every dollar, every 40 cents out of every dollar I put in the market to go into 10 stocks. I have not wanted to do that for 2 years now. And for the first 18 months of that, it didn't work. But the last 6, it has. And so that's where I want to do. I just want to broaden out. And the word I always use at the end of my talks is cautious. Just be cautious. I think fixed income has a place in portfolios today because interest rates make more sense relative to where inflation is. For 15 years, they didn't. The Fed, that's another thing that QE did. It killed the 60-40 investment approach, right? And I would never be 60-40 personally, but that's just not I'm riskier than that. But for 15 years, interest rates were below inflation, and it made no sense to own fixed income. Today, it does make some sense. I'm not taking big risk. I'm not buying high yield. I'm not worried about a massive crisis, but I am worried that the economy is going to slow down. And I guess I mean, I know we're probably coming to an end here, but we have this, people call it the K-shaped economy. And I'm like, all right, that's a cute way to say it, but it's just inequality. And I think QE did that too. If you had assets, you won. If you didn't have assets, you lost. And we already see at the bottom, credit card losses are going up. Auto loan defaults are going up. Student loan defaults are going up. The only default rate that isn't going up right now is mortgages, and I'm going to steal this from a guy that works for me. He's like, yeah, if you have a 3% or less mortgage, before you defaulted on your mortgage, you'd open a crack den in your basement. All
Is
right?
that Stein? Did Stein say that?
Stein said that.
He's a smart guy.
He's great.
And so at that lower end, I think we see some problems developing. At the higher end, it's wealth effect spending, right? It's stocks up, houses up, everything you own is up, up, up. But all of a sudden now, for 6 months, even after this huge rally we just had in these last 36 hours, the stock market's flat for 6 months. And I think
Right.
that will affect wealth effect spending. And if you have both of them slow down, then that's a slower economy.
This was
Real
an
quick,
awesome
I know
show.
we're
Bobby,
coming
you
to
have
an
anything
end,
else?
Jimmy.
What's
Jimmy,
that?
I know we're coming to an end, but there's one more by Pat Barry that I wanted to put up just so that he got his question answered. We're very focused in this particular show on the audience participation.
Yep.
Pat says, didn't the Fed also purchase or swap distressed mortgages at par? I think Brian is right. Mark to market is bigger and they don't do productive QE.
Right. There were a bunch, they took the whole Bear Stearns balance sheet onto their balance sheet. And after they marked it down, by the way, and they bought a bunch of AIG. But AIG had this big portfolio of CLOs. If they would have been allowed to hold them, they would have made money. Instead, they had to sell them at like 20 cents on the dollar. All they had to do was hold them. Right?
Crazy. Yes.
Yeah. And anyway, so they did swap these things, and that was actually the Fed came in and bailed out. One of the big things, if you remember, Paulson bailed out Goldman at the expense of AIG. And so there was a whole bunch of things that they did, but I believe that the Fed did too much. They got way too involved in the market. They didn't need to do that. All they had to do was change mark-to-market accounting. By the way, if you're really, really interested in this, I wrote a book back in 2009. It's old now, but it explains this whole thing. I only had 8 minutes to do it here, but it probably, if you read 40 or 50 pages of that book, you'll understand why I think the way I do.
I love that. I like the way you think, by the way, and that's why we've been on the same team for so long. And I appreciate you coming here. Tell the people where they can find you. On Twitter is a good place, right?
Yep, it's at Wesbury. There is no T in my name. Somehow we had an English dude come over somehow, and when they recorded him, they dropped the T. So
yes, no doubt about it. Bobby, you have any last words, or should I play us out?
Yeah, last words from Remo because he just posted it on Twitter. California bullet train, 126 billion spent. It began in 1996. It has had 0 passengers and has traveled 0 miles. NASA Artemis, 4 billion spent. Started planning it in 2017. 4 passengers, traveled 695,000 miles. I'll add to that. Elon Musk sends rockets to space for 70 million.
Yeah.
Tell me.
So
tell me which way we should be doing.
Gavin Newsom, like I said on April 1st, I was suspending my current career to campaign for Gavin Newsom, not because he is the April Fool's joke. Guys, thank you guys so much for joining us. You know how much we love this show because we love the audience participation. You guys are the best. We don't consider you fans. We consider us fans of you. Thanks to Trady Air for hosting it. Please join Bobby and I at unfilteredinvestor.com with Mike Arnold. That is Brian Wesbury, and he always gives a great opinion.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.